Trading without confirmation or context is one of the most dangerous things you can do. So in this video, I want to explain to you why trading without context is basically gambling. And I want to introduce two basic things you can use to introduce a lot more clarity and focus into your entry models. And so those things are going to be based on basically how to read candles in a lot more clarity. Now, I trade with a three-step model, and every trader you see has these three basic things in their sort of entry plan or their trading plan. So you need to have a key level to know where you're trading from. You need to have an exact entry into that key level, and you have to use order flow to know whether you want to be buying or you want to be selling. So when you take losses are generally part of the game. However, if you find yourself on a losing streak, the easiest way to get out of that losing streak is to understand, are you trading with context, or are you trading just blindly off some indicator, right? Or some pattern? You need to have the correct confirmation when you are taking a trade, right? So the context that you're missing is basically in footprint charts, right? So footprint charts is probably the best way you can trade going into 2026, right? There's no noise on footprint charts. They look more complicated than what they are, and they give you the true confirmation you need. Now, who is in control of the price? So whenever you take a trade, you want to know who is in control of that price. Is it the buyers or is it the sellers? Now, the market will always leave clues on what it wants to do. Your job is to read those clues at those key levels and decide whether you want to be going long or whether you want to be going short. And there's two ways you can do that. You need to see who is aggressive and who is being rewarded. Those are the two things you need to determine whether you want to be going long or short, right? Who is being aggressive and who is being rewarded. Those are the two things that you need. Nothing else at your key levels are necessary, right? Who is being aggressive and who is being rewarded. Those are the only two things that matter. So I want you to reframe how you think about looking at the markets. In order to go short, so I'm going to be going over a short setup in this video. In order to go short, you need to see the ask being a lot greater than the bid, and the market doesn't go up. So I'm just going to give some real life examples of what that means. So don't trade without context. So for example, we've come in this gray box here. This is a key level. So I've made separate videos on key levels. A key level can be a fair value gap, any kind of resistance or support zone you have. It can even be an indicator EMA crossover, even though I don't recommend trading like that. You need to have a couple of key levels, and your job is to see who is being aggressive at the key level. So that is the first thing you're looking at. Who is being aggressive at your key level? So that yellow box that I've highlighted on the left is the same as the box you see on the right. Now, on the right, we can start to depict what's going on inside of those candles to truly understand what's going on. So this is a 1 minute chart, and this is also a 1 minute chart, right? So what we're looking to see is we want to see how the market is responding in this region, right? So order flow is not complicated. It's actually pretty simple. For a short, there has to be more aggressive buyers than aggressive sellers at that price. So at this price over here on ES, if we just drag it over to the right, what we can see is generally speaking, more aggressive buyers. Now, the reason I like using footprint charts is because the footprint charts give you a very quick and easy to understand visual representation of the delta. So in other words, the darker the blue, the more aggressive buyers there are. Now, if you see a lot of aggressive buyers and we break below the zone, what does that mean? It means the buyers have failed. So buyers are aggressive, but buyers fail, which means sellers are in control at that zone. And that is the most important thing, because this is the question you want to ask yourself. Who is in control of the price? Is it the buyers, or in this case, is it the sellers? Now, if sellers are in control, that means there's passive sell limit orders resting over here. So in simple terms, buyers hit the ask, there's more aggressive buyers than sellers. They failed to break above the zone, which means that the sellers win. We don't break above this zone. We only have a wick. As the market opened 9:30 Eastern, we had a bearish break to the downside. So we can see this zone is holding as supply. Sellers are in control at this zone. Now, I don't trade the first 5 minutes. I've never ever traded the first 5 minutes. I think some people call this the ICT opening range breakout, the orb strategy, right? So I don't like to give it all these different names. But if you're an orb trader and you trade the New York session or you trade US markets as a whole, S&P 500, Nasdaq, US 30, this is going to be for you. The first 5 minutes gives the most context, right? The first 5 minutes is where the magic happens, because what you're looking to see is the market sentiment as the New York session begins. So in other words, between 9:30 and 9:35, who is being aggressive, right? So a zoomed in candle over here is the left-hand candle. So this left-hand candle here corresponds to this candle. So this would be 9:32, right? So at 9:32, this was the main rejection back into the zone. So what we can see over here is just depicting a few of these. Now, I'm not looking at all the numbers. I'm not trying to read all the numbers. I'm only focusing on the delta in the key levels. And just for argument's sake, just to slow it down a little bit, I will break down what some of these numbers represent. So 330 by 525, right? That's just this row over here. What does that mean? There's 330 market participants hitting the bid. That's this left number. And there's 525 market participants hitting the ask. That is the right-hand number. So to make it very simple, what's going on is there are more aggressive buyers than sellers. We had the same logic over here. There are more aggressive buyers than sellers. We had the same logic over here. 279 for 117. More aggressive buyers than sellers. Now we had that all the way at the top. 27 for 0. So if we can see the first kind of, 9:30, 9:30, 1, 2, 3, 4. If we can see the first sort of 1 to 5 minutes showing us that the buyers are showing up and being aggressive, and we actually break below the zone, right? We see the market closing below the zone on 2 occasions. If we see aggressive buyers but lack of follow through, who is in control at that zone? So again, we're coming back to this slide over here. Who is in control of the price, right? The market will leave clues on what it wants to do, right? The market left a clue before the session even opened, right? The market left a clue here. This was around 9 o'clock EST, right? 9 Eastern. What we can see is a ton of aggressive buyers and no reward. Now, when the market opened, we see a ton of aggressive buyers over here, blue delta, but we see the market unable to break above the zone over here. So the first 5 minutes is typically where the magic happens. So now the question is, how can you avoid trading like this? How can you avoid these setups, right? I think I even took one of these setups. How can you avoid, taking break evens or getting chopped out like this? So the markets will chop, and there's nothing you can do to avoid all these losses, but there's things you can do to try and understand the context around the price. So a simple answer is basically order flow. So reading the market orders gives you a real insight to a real insight to who is being, that's meant to say absorbed, right? Wrong spelling, absorbed, right? So this whole kind of video about context is about absorption. Now, by definition, if you think about it this way, if the market moves moving lower here, that means sellers are being absorbed, right? If the market moved down over here between 9:30 and 9:45, that means the sellers are being absorbed here. Now, by definition, if you see a range, that means both the buyers and the sellers are being absorbed. Both buyers and sellers are getting trapped at that price. And so by definition, that's what creates a range or a consolidation. That's what creates painful price action to trade in like this, right? When you see these clean moves to the downside, it's one-way absorption. Aggressive buyers are hitting the ask, but aggressive buyers are failing. They're not being rewarded. So sellers are in control, right? Same as what we're saying over here. Who's in control at your key level? So the simple answer is both sides are being absorbed, right? So this is what I mean by that. So I've taken snapshots of the price action, and next to it is the corresponding footprint charts. So over here, what we can see here is we see a lot of red delta, but the market pushes higher. Huge push to the upside. We barely break below the zone. So we have negative delta and then break to the upside. Okay, so buyers are really in control. Then over here, we have the same thing. Lots of aggressive buying, but we break back into the zone over here, almost breaking below it. Okay, so now sellers are in control. Then over here, 91 for 360 on the far right. Now here, buyers are aggressive again, right? But then the market breaks back into the zone. market breaks back into the zone. So what we're seeing over here, we're seeing consistent shifts of absorption of sellers or aggressive sellers, absorption of aggressive buyers, right? Absorption of aggressive sellers, again, absorption of aggressive buyers. And so the reason the footprint charts are so powerful is because the footprint charts allow you to see who is being aggressive and where those rejections are happening with aggression. So in other words, you're in a range because you're at a really tight range between support and resistance, right? Supply and demand. And so that's what creates the ranges, right? So a lack of movement just comes down to what we call two-way absorption, right? Now, the main trades you want to be taking, you have to, if you want to take a short, right? Shorts on any market come down to there being more supply than demand. Now, the only way you see whether there's more supply or demand is by defining your key levels and seeing the buyers being absorbed at that key level, right? That's the only thing that's happening. So if we take a look at this market over here, so this is ES shorts we took, so ES shorts over here. So just breaking this trade down from Monday. So I took a similar-ish trade over here. So this was now Monday, the 15th of December, 2025. So Monday, 15th of December, there was a good sort of short, there you go. There's a good short, resting over here. So we want to be focusing on what's going on basically in this level. And as we begin to break outside the level, this is what we're looking for specifically. Now, just to make things a little bit clearer, right? The order flow in the key level is what you're watching out for. You want to see how the order flow is behaving at that key level, at that key zone. Now, again, it was very similar to essentially what was going on here. So if we just take a snapshot of this, let's get rid of that. If we just take a snapshot of this, let's move that back here. So, let's move that there. There we go. So here we go. So absorption of aggressive buyers. Now, the footprint charts don't tell you everything, but the footprint charts give you enough confirmation to go short, right? So again, you're looking for a break and retest, right? So the break and retest will look like this. We have a break below our zone and we draw the line like this. This is important to understand, right? So I do not enter here. This is not where I look to enter. This is not where I enter. I don't have a tiny, stupid, tight stop loss like this, and I certainly don't look to enter at the break. This is wrong, by the way. I do not look to enter at the break. What I'm looking to do is I'm looking for a break and a retest. I'm looking for a break and a retest. So the retest is going to happen inside the zone. Now, realistically, it can happen somewhere up here. It could happen here. It could happen anywhere. Right? We don't know where it's going to happen. We just have to read the order flow in real time. And how you do that is basically through order flow. So once we have a break below, we want to see how the market reacts at the retest. And we're looking to go short as the market comes below our break line. So here's our break line over here, right here. There's our entry, there's our break line. And we can have our stop loss. Ideally, you can have it all the way at the top of the zone if you want, right? But I'm comfortable to have it just over here. And we're targeting, again, a 1 to 2. Right, a 1 to 2 or 1 to 1.5 is perfectly fine. Now, what gives you the confirmation to go short over here? In other words, what was the retest doing? What was happening here? Because this is where all the answers are sitting, the yellow box. Now, again, it's not very difficult to understand that this rejection was this set of candles over here. So this wick, right, this yellow box corresponds to what was going on over here. And I want traders to understand that how simple order flow is to understand. Order flow is almost about looking for the opposite and then doing the opposite. So in other words, look for a break to the downside and then look for buyers. And when you see buyers and a break to the downside, you sell. So the whole point of order flow is almost looking for the opposite participants, looking for them to fail, looking for them to be absorbed, right? The technical term here is absorbed, because we see all these aggressive buyers showing up and they're hitting the ask, right? We see these ask transactions, right? We see the number of contracts hitting the ask far bigger than the ones hitting the bid, right? That's what results in these blue boxes here, this blue delta profile. We see countless rows, right, at this price. So this price here was 6,900, 6,901, 6,902, roughly around 6,900. So at 6,900, what we're looking for is we're looking for the aggressive buyers to be absorbed, right? We're looking for the aggressive buyers to fail, and therefore we're looking for that absorption. And what confirms the absorption, because I get questioned about this as well, what confirms the absorption for me in my head is a break back to this zone over here, right? Break below this zone, this red line over here. So what we're looking for specifically is this, right? We want to see a break below the zone. We're looking for a retest, and price can mess around here for a little bit, and then we look to break, and then we look to go short, right? We look to enter and go short over here, but you're only going short with the correct order flow confirmation.